Welcome to Dukascopy TV. I'm Elaine Stenson. Sweden's trade surplus rose to €4.6 billion from €4.3 billion a month ago on a seasonally adjusted basis. I'm joined now by Elisabet Kopelman, Head of Economic Research with SEB in Stockholm. The Swedish economy is performing well, with Sweden's GDP increasing by 3.1% in the fourth quarter of 2013. But some underlying details show that although the economy is strong, it's not quite as robust as the overall GDP growth rate indicates, mainly because one half of the growth rate was down to a large build in inventories. Elisabet, how do you respond to this?
Yeah, I think that most analyst economists have drawn the same conclusion, that these numbers did exaggerate the underlying strength in the economy, and precisely for the reasons that you mentioned, namely it was driven by stock. So that means that we have been a bit cautious in penciling too much effects from these numbers into our outlook for the current year. That said, if you look at other indicators such as sentiment indicators and developments on the labor market, when you look at employment growth and so on, these still point towards quite decent growth in Sweden and a continued pickup in the economy going forward. But because of the composition of growth during the fourth quarter, we do expect to see a setback from that in the beginning of this year. So the first quarter in Sweden might actually be quite weak, more or less flat, and that forecast is supported also by the decline we did see in sentiments indicators that were out this morning.
Also, the Swedish finance minister has concerns over the potential standoff between Russia and Europe and how, if the uncertainty persists for a prolonged period, it would really hurt a small, open export-dependent economy such as Sweden. How much of an impact could the current conflict have on Sweden?
As regards the dependency on exports to Russia, that is actually quite small, less than or around 2% of total exports only. So Sweden is not directly dependent on what's going on in the Russian economy, and less so than the Eurozone average, for example, and less than Germany. That said, I mean, since Sweden is an open economy, of course, if this crisis would escalate, for example, if we would see sanctions that would sort of constitute more of a threat against global trade, or if we would see sharp increases in energy prices and so on, that would affect the outlook for the Eurozone economy as a whole, then of course that would also affect Sweden. But the direct effect is not that large.
Some analysts are saying that Sweden may have to raise taxes in order to keep its public finances in order, that there isn't as much money as people think, and that the government will have to find billions, maybe up to $11 billion or around 2% of GDP, just to keep the current welfare ticking over. Do you agree with this?
Well, first of all, I think that actually, I mean, what stands out in Sweden is that the Swedish public finances are very strong in international comparison. I mean, if you look at the gross public debt in Sweden, it's only around 40% of GDP. That is very strong compared to most other Western countries, and basically because Sweden has not been as affected by the last few years' financial crisis, like, for example, many parts of the Eurozone. It wouldn't be correct to say that Sweden is in a position where we really have to tighten fiscal policy because of the concerns over public finances. There was a report out today from the National Institute of Economic Research where they were looking into the very long-term outlook for Swedish public finances. And yes, they did say that in order to keep the present service level in the public sector, then you might have to raise taxes a bit further, around 2% of GDP. But that is also in order to actually, Sweden has a surplus target for public finances. So that was also in order to actually be able to fulfill that target, which this institute actually thinks that maybe because of the strong position of public finances, actually Sweden should scrap this surplus target. So I think overall while there might, if you want to have in the short term, if you want to have spend more on some certain areas, then of course you might have to offset that with the raising income and other areas. But if there is no reason to be concerned over Swedish public finances.
Okay, Elisabet, thanks so much for joining me on the line today. And that's all we have time for now, but we will of course be back with more tomorrow. So until then, bye for now.